we are on our live trading session video. Now, quickly moving on to here, we can see that we have one trade that we are in. It's currently in a little bit of a loss, and we had two trades actually stopped out. Okay, as you can see over here towards the end. Now, is the strategy really continuing to work, and how should we review this as a professional? This and more in this live trading session video. Hi traders, thank you for joining the Master the Markets team in our live trading session video today and supporting us in our mission to spread the truth of trading and help you achieve consistent trading performance. It is Stu Narpan here, founder of Master the Markets Elite Trades Conference and the Traders Open Day. So here we are, traders, on this particular trades that we're doing on the 100k traders challenge, the one that I've been showing you just now. I'll be talking particular today is on the 50k account that we're doing on the 50% OE strategy. Now OE stands for open equity. Basically it means how much move is left every time you enter a trade. Okay, now coming back to here, how should we review all of this? So we recently had, after the CPI news came out, the Consumer Price Index news came out saying that basically they're not going to increase interest rates, going to hold on to it, the Fed, and the inflation keeps rising, right? So because of that, Consumer Price Index said the inflation actually is actually on the rise, so prices are going to increase more further. That created a little bit of low confidence in the markets, and we had this big red bar happen on GBP USD, which actually made us actually get stopped out on our initial stop loss here. Okay, that was on GBP USD. The other trade that also got stopped out was on the Aussie dollar as well. Okay, our point of entry was around here. And then in terms of our trail, we had trailed it to the low of this bar. So we had a little bit of small profit in here. Now you can see over here on the account statements that you can see over here that we are taking on the 50k account towards the 100k is you can see that on GBP USD, yeah, there we go. We had stopped out on that one there on our initial stop loss at 2675 around there, which it had kind of triggered. And in terms of 2572, sorry, this one over here, that's the stop loss there. And then in terms of Aussie dollar, as you can see, we had a small profit that we came out of as well. Okay, so those were the ones. Now, how did we actually manage the risk? Some of you have been quite observant, have already said it to me already and messaged and all that, saying, how come, Tiru, that the losses, if you kept it really, really small, right? So that it doesn't eat up into your other profits, so that your overall still net profit up a little bit under 3% at 1472. How is that? Remember, traders, that this is all just on only one strategy and it's all end of day trading. Okay. Remember, the most important thing here is to take the concepts away and apply in your own strategy, if you may. So the first thing what we actually do, traders, following on from one of the interviews that was done by one of the really great traders over there at top, you can look at him. He mentioned that whenever there is a very big, before I give you this background, basically they most of the really top traders, right, professional traders, they come from basically being professional poker players. So by using those concepts from the poker game, they actually apply that into the market. And Ed Top said that in terms of Beat the Market, the book is a very famous book. And he says that whenever there are trades with very high probability, go all in, okay, with your risk management at whatever maximum risk management you can take, anything from 1 to 5%. Really professional traders who really know what they're doing, they go at 5%. Now, however, those trades that are very low probability, right, Then what you then do is you have a reduced risk on it. So, for example, on this account, what we do is, traders, when we go usually in, we have a little bit different type of risk management, but generally the maximum we would take is 1.5% risk, okay, 1 to 1.5%. Now, on trades, when there's low probability, we will usually take only a quarter of that or in between, okay? So usually at 0.5% or 0.25% of 1% original risk, or at 1.5% maximum risk that we take. So this is how we usually take it over here on the low probability trades. Now, how do we figure out the low probability trades? Now, low probability trades we have figured out in all our testing that we have done is that sometimes it's based on very big oversized bars, okay, or certain trades that are being anomaly. Now, for example, over here, in terms of cable over here, why did we take a low risk? Because the pattern that we saw over here, in terms of what has happened from before, uh, determined that as a low probability trade. Okay, that's why we took it at lesser risk at 0.5%, and that is why on over here you can see that we didn't take the full £500 loss, only 260 at 0.5% risk we took it. In terms of Aussie dollar as well, even though it was a win, of course you do not know that in real time, and again that was also not a very high probability trade setup over there. So we had to take it at a lower risk at 0.25%. And where we actually got out is actually over here on the low of that bar, because we were using a time exit, because usually it will get to our target, the green line here, at 50% OE within 4 bars, or in this example, because you're doing on a daily time frame, is within 4 days. Okay, and then you can see after 4 days it still hasn't reached its target. It's a slow runner, so we trail it tight, and then the next day it took us out, but we still made that profit, which is what you are seeing over here on the account statement. Okay, now on trades which are high probability, we go all in at 1% or 1.5%, and that's what you're seeing over here on the bigger trades, and we also know when to let them run as well. Okay, so that's the first thing I want to tell you on the 3 key points over here. So the first key point is that alter your risk based on probability. Okay, reduce your risk based on probability. That's the first point I want to give to you guys when we get stopped out, or because still some trades still running. So you see we still have this trade running, and because it has not come out of our stop loss yet, or not invalidated the trade yet, okay, on euro yen we're still running that, which is going on in here. Okay, so that's that one there. Now, in terms of the other 2 trades that got stopped out, the second thing that can really happen is, as I've written down here, is you can ask yourself, whenever usually people get trades stopped out, let's say 2 trades stopped out, or the third one also in negative, that you can see with euro yen, their confidence usually drops, isn't it? And the usual question that happens is the strategy really working? Right? And then some people who do not know how to review this professionally will stop the strategy and run off to the next shining strategy, right? And it will keep on going forever. So, how do you actually look at this in a professional way? The first thing you got to ask yourself, if the strategy is really working, you got to look at your drawdown levels. Okay, for that, this is where all your testing of your strategy comes in from previously. So let's take a look at that. Now, in terms of drawdowns, so we have to record all of this, what you're seeing over here, all onto a spreadsheet, and then record it all down. So over here, you can see from our previous testing. Now, before I come to the previous testing, you can see over here, right? So I've listed all of the P&L coming in from the account statements over there, right? Over here, you can see all of this, I've transferred it over to the journal here. So 16 trades altogether that you've taken so far since February. And since we started the challenge, taking the trades in consistent manner, and then you can see that traders, when you list it all down, then I also got my profit and loss in percentage basis. I equated $500 as 1%, right? Because it's a 50K account. And then we got that. And then here, the last one is the cumulative, right? So we're just adding up each one on the column. So 0.5 is started, 0.45, take away that, take away that, take away, then it went to minus 1.4, then add that 0.81, and so on and so forth. Overall up 2.89%. Okay, right. So then you can see that what is actually going on in here. I'm analyzing the maximum drawdown after I equate to this curve over here, right? I'm checking at all these valleys over here. The first thing that catches my attention is that every time that it does a drawdown, a peak to valley drawdown is what we call this. This valley here doesn't take out the last one, right? You can see. And right now it's taking a little bit of dip. What we got to be careful of is that it doesn't take out this last valley over here. Okay? Right. We have done all the testing before. That's what gives us the confidence to scale. That's the first thing. So that's a good tick, right? It hasn't taken out its last valley yet. Okay. Now the second thing that we also then look at, traders, is the maximum drawdown. Has it exceeded our testing maximum drawdown or not? So when we take a look at this, our maximum drawdown, we add up the loss clusters over here, and when we do that, we find out that the maximum drawdown, you can see, is actually over here, minus 0.64 at this point between 9 to 11 trade over here, right? Minus 0.64 maximum drawdown. Now, to see the strategy still continue to work, we compare that against the maximum drawdown of that strategy in our testing. So when we go back to our research, what we have done here, we've tested all different permutations over here. We find out that the maximum drawdown actually came out to be 4.04%. Okay, so that's how we know that as a professional that the strategy is still okay, not hit maximum drawdown, we can still carry on. In fact, my mentor always used to tell me, who trades for Morgan Stanley's money and all that, he always used to tell me, Tiru, whatever in your testing a maximum drawdown, always times it by 2. Okay, so expect that, give that leeway for the market to surprise you. So in here, minus 4% was our testing drawdown, but we will usually give it to 8%, which comes under the bracket of our traders challenge, which is 10% maximum drawdown. Okay, that's how you take on those challenges with conviction. Okay, you need to know all of this, and that's why having a professional next to you to guide you and to mentor you is very, very important. Right. So that's the second thing I wanted to tell you in terms of reviewing a drawdown and also having your equity curve. And the main thing is that look whether its valley has been taken out, the previous valley. That's what we all want as professionals, right? The last valley not to be taken out, and then the peak just keeps going up. It's very important. Okay. So I've given you that. Look out for the valley and look out for the drawdown. The last thing is, in terms of the valleys and all that, and which gives us the confidence to keep going forward, is our testing from before, right? So you can see over here, when I go into here, you can see that if I do this one here on the 50% OE on the equity curves over here, now, we have changed the strategy here, but before we scaled it up to the 50K account, you can see that, just look at this part of the curve, the maximum it went up to over here was about 32.76, right? And 32.76, you see over here in the beginning, it went up a little bit, a steep rise up to 30, and then gave it all the way back. Went back to drawing board, then we got this part of the curve, right? We've done videos on this, you can go and check on YouTube on that. And you can see the valleys never took out the previous ones. This is what gives us the confidence that finally then to scale on to this account over here, as you can see. Okay, traders, that's what you are having over there. So that's how we are doing it. And then the final thing I would say, with all this conviction, then you keep going and keeping your focus on your consistency. This is the main thing. Okay, keep going forward, maintain your consistency to realize your results and for the next peak to occur. All right, so as a summary point, what are the main things that I'm going to leave you with from what we've covered in this video is that the first point is that reduce your risk according to your probability. Okay, that's the first thing. Second thing is to see if your strategy is still continuing to work or not. Monitor your drawdowns. Two main things in your drawdowns. You look at your last valley, look at your maximum drawdown at any one point of time. The third thing then I leave you with is once you got that, then move forward with absolute focus on the next trade, which is maintain your consistency. Don't get swayed by, oh, the last 2-3 trades, whatever were lost, losing confidence, and then you lose to take or you miss to take the next biggest trade. That's why maintain your consistency. Keep your focus on your rules. All right, traders, I guess with that, we can do a wrap up on this video. Alright traders, remember that all these principles you can cross-transfer it to any strategy that you are currently doing. That's all from me now on this video, and as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.